Hello, everybody. Welcome to the third session of the four-day live trade execution webinar series. My name is Mark Shawson, the pattern trader. I've been talking this week on how I look at price action, price patterns and price action and trends in the market to capitalize on big moves in the markets. And, I've been kind of struggling to get across a few concepts because there's been so many countervailing moves in the market. I'm going to basically share with you just the move today. So I told you that we were going to have a Federal Reserve meeting where the U.S. Federal Reserve makes its determination on interest rates. Now, it was pretty well baked in the cake, but I said, despite the fact that we pretty much understand what's going to be going on, you can see that this is what happened before the meeting. The market absolutely crashed. So the Dow went from up 400 to down 100 and then finished up 500. So this is the kind of volatility and movement that I was anticipating, that I was calling for. And, I also said that, what we see today, you could see the complete opposite tomorrow. So this is the nature of Fed meetings, and this is why I've been somewhat struggling to get across a couple of concepts, because on one hand, we see, certain price action. On the other hand, or patterns, and the other hand, you see certain price action. And so what the challenge is to all traders is to discover what is really the pattern that is going to drive the next direction of prices. So what I'm always looking for is to take a piece out of the middle, out of moves. And what so either the market's moving up or it's moving down, or it's just kind of going sideways. And typically, I'm always looking to, buy a market that's going up or sell a market that's going down. I really don't want to be involved like in the euro versus the British pound, something that goes like this, and we try and day trade it 5 or 7 times a day. What I try and do is find an area where I can get comfortable buying or selling something and then sitting in it for 3 days, 3 weeks, 3 months, whatever that time period is. Now, what I've been observing in the stock market is that you've had a long-term uptrend. And then all of a sudden I saw a bunch of patterns and price action that started to suggest that there was a new sheriff in town, that the markets were becoming somewhat bearish. And we see first this pattern called the double top, which looks just like an M top. And so that is a reversal pattern. Whenever you see that M top, it means that the market that was going up, once it crosses this neckline, which is basically a line drawn through the pattern, once we see it go through there, then it's confirmation that it's going to go the other way. And basically, that's what we've seen. So we see this double top. We also see this, what I call head and shoulders, where it looks like the left shoulder of a man or woman. The peak is the head, and then we have the right shoulder. So now we have what looks like a double top and head and shoulders. And based on what we're looking at, in my mind, this is my expectation. If this is a bear price pattern, if these price patterns indicate that the market is bearish, then we should see the market going like this. And here's where the nuance comes in, right? Where if the market starts doing what it doesn't indicate, then it's, by definition, busting the implications of that chart. And so we call that a busted pattern. And so now we're really at this inflection point where I'm looking at a weekly chart, which this represents. Each one of these bars is a weekly bar. And you can see that if we were to close this week, we would close right at the high end of the bar. So we made a new low, close at the high end of the bar. And so I look at a combination of patterns and price action. And in this particular event, the price action is somewhat at conflict with the patterns, in that we have what appears to be a bearish pattern, but now we have what could be interpreted as a bullish double bottom right here. And then you also have in a few weeks prior, this key reversal, makes a new low, close on the high. Now, again, this is why it's very important to observe how something closes, because this is only, what are we, Wednesday? I've lost track of time. So right now it looks like this is where it is relative to the high and low. But by Friday, we could look either much higher. This thing could, go much higher and still close up here, and that would, look even, more bullish. Or, if we settle back and by Friday we look something like that, it's going to change the whole context of what this looks like. So I put a lot of weight, a lot of currency, no pun intended, in waiting to see how a market closes relative to its high and low. Because, what this says to me is that this went to the lows, tested the lows, and if it closes on the high, the buyers were in control. Now, again, that may not, be completely defining. Again, I'm looking at this pattern and how this market starts behaving within the pattern. So you can see that we came out of this pattern and then we hit this very formidable support line. Now, I still think these patterns are going to kick in and this thing will go lower. So this has been the nature of these rallies, where they look very profound when you're in the midst of it. They never let you out. They never have a downtick. You can see that we had one of these rallies right here, where it makes a low and this is for weeks. These are weekly bars. So for 2 weeks, this did nothing but go straight up. So you're looking at a market and saying, wait a minute, this is a bear market and prices are doing nothing but going up. How could I be right about this? And that's what this market does. It forces you to, create your own demons and throw, all kinds of thoughts into you. And again, this is a weekly bar and it goes straight up for 2 weeks. And so this has been the nature of this bear market, is that while I've seen the bear market play out, it's been 3 steps forward and 2 back. And so now we could have another thing where we're up and maybe up into next week. And then all of a sudden, you're facing a bunch of headwinds. And so this is kind of the offset. So today we had a meeting, Jerome Powell made a statement. And what I look at is not what the statement is, not what Powell is saying. I'm looking at how the market interprets that statement. Now, he came out and he basically said that we're going to do 11 interest rate hikes. We're going to do 7 this year and 4 next year. But he also said that every, meeting is going to be a jump ball and we're going to make a determination if we'll go at that time. So he left himself some flexibility. He also said that he was going to do tapering of the balance sheet. Now, typically when you get both of those, that is a headwind for stocks. But again, our job is not to play armchair economists, right? Whether I'm right or wrong, I still think the market is going to go lower, but it could go a lot higher in the meantime. And so the idea is to look for pockets of support or resistance or trades where you can make risk reward calculations. And yesterday I talked about a couple of trades that, even though, so what's happened is that you've had a market that is substantially beaten up. So people will say, how can, we have a circumstance where the Federal Reserve is so, sorry, I switched my screens today and I've got all this crap in the background here. How can we have this situation where the Fed is so now aggressive, in terms of rate hikes, and yet the market went straight up? Because these markets have been so beaten up. So the markets have really done a lot of the Federal Reserve's job already, right? They've already priced in all of these rate hikes. When you see PayPal dropping from 320 to 90, a lot of this has been priced in, and it's so beaten up. So yesterday I said, look, I basically bought this in the aftermarket right here at $100.50, $100.50, because I just thought that there was, a risk reward calculation that I could do in my mind, where I could, again, this is not a classic pattern. This is still in a heavy downtrend. So people say, well, the trend's your friend, whatever. But trends change and markets have these, counter trend moves where they do move counter to the main trend. And so I will do these little carve out, scoop out trades where I'll get in and, get out very quickly. I mean, I don't think this is going to be a permanent trend. I think that, 2 or 3 days of this thing and it's going to be right back in your face again. So I basically got in here in the aftermarket yesterday, right before the webinar started at 100.5, and my price was 107. And it got there like, 15 minutes before it closed and I just blew out. So I actually made like 2 to 1 on my risk. So in my mind, when I got in here, I was just risking till that low. And what I was saying to you yesterday was that this looked like a coil, right? Where you have several bars, several days. Now, this is a daily chart where each one of these price bars represents one daily session. And you can see those 5 sessions, all of those sessions sat within the daily range of that little guy right back there. So what I said was that this is just building energy. And then the energy, then bursts out in the direction, indicated by the pattern or the trend. In this case, the trend is a downtrend, but there's like a mini little area here where it's got this little bottom. And this little bottom could, translate to, who knows how big a move. And so this is what I look for. I don't, look at what Powell's saying. I don't look at what gold's doing. I don't look at what the Ukraine situation is doing. So we have this downtrend line, and it's very possible that PayPal, comes all the way back to, $130 from 100. And so I just look for areas or pockets where I can make a risk reward determination. Now, one of the, other trades that I talked about yesterday, likely to do well in this environment, are financial stocks. And so I advised our members several days ago to buy or go long Bank of America. So what I was noticing is that, again, this is where there is a certain pattern that indicates this is very bearish. And at this point it was, you see this double top, and it did its job. When you saw the double top here, it went straight down. So what I look for are these patterns that, give me an indication of a direction. And then I'm simply looking to take a piece out of the middle. So once I understand or see this double top, then I'm simply looking to extract a piece out of the middle. I typically get in pretty close to the top because I can see these things turning and I look at the price action. But notwithstanding, what I'm looking for are certain patterns that give me an indication that for 3 days, 3 weeks, whatever, I can take a move out of that. And so sometimes these patterns will appear, they'll do their job, and then the market will kick back into the long-term trend. And so this is the kind of the difficulty, is understanding which are the long-term trends, which are the intermediate trends, and I'm just looking for setups. So what was very curious to me was, again, I showed you yesterday how unbelievably sometimes these markets can seem so random. I mean, the market goes through all this gyrations, it's moved by all of these things, and that, you see this line, and it's just amazing how from here, this will go all the way here and then find a way to intersect along here. And this to me is just the beauty of chart trading. And that's why I keep trading, because it never ceases to amaze me that, in pandemics, these outlier things, markets will go to enormous extremes, and yet they will hit exactly on certain trend lines. I'll show you the NASDAQ in the pandemic. It actually just pulled back to a level, on a trend line and hit it, and then it was an inflection point to go higher. So what I noticed was A, this intersect, and then B, how this formed this little mini double bottom here. Had 2 days where, went to the same area, and then I surmised that this was going to be a bottom, and I actually bought the stock in the aftermarket right there at 38.5, and the next day it exploded. So, and then yesterday I said that we were likely to have this island consolidation where you have a gap here, and now you have a gap there. And so you kind of have this island in the middle, and, this thing looks like it's going to keep going higher. The only thing I'll say is that when things go straight down, they typically, don't go straight up. But this thing, looks like it is, going to, in fits and starts, go back higher. So again, really what I'm trying to point out is that I just look for setups. I don't care what's happening in oil or gold or the Ukrainian crisis or what Powell is saying. I'm constantly looking for setups where I can evaluate risk reward opportunities. So, Jean-Pierre says, thank you for the advice. I went long PayPal pre-market at 102, took some profit just before the FOMC. So you're welcome, John. And so I think there's, a lot of gas or some gas left in the tank. I think this pain trade, as I call it, is probably not over, where, all of these stocks have been so beaten up that what the market likes is transparency. So on the surface, what Powell said should be very bearish for stocks, because to me, long-term, what he said is going to be a headwind to stocks. Typically you want the Fed on your side. Now you're going to have the Fed in your face. But the thing is that these things have anticipated this. They've discounted. So the market is a discounting mechanism. It's ahead of the news. It already knew what Powell was going to say, and it's discounted how bad things are going to get. So this is Roku, where it's dropped from 500 to 100. So, when something's dropped 80%, there's a good chance that, you're going to have a dead cat bounce, where you hit this area where there's a common thing, and you could get an extraordinary bounce out of here. But to my mind, these bounces are probably going to be transitory, probably another 3 days, and then you'll kick back into this thing and it'll, keep going lower. So in this case, the trend is your friend, but, and I would just watch this line here. May get a little bit above here, and then it's likely to, but it's so beaten up that it's got nowhere. It's like that beach ball where you keep on, compressing it further and further underwater, and then you take your hand off and then it just explodes the other way. And this is what happens. People are short, 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 short. And then, if people cover their shorts, then you've got this huge vacuum. And these short covering rallies are enormous. I showed you how Upstart went up 60% in 2 days. I mean, this is a beaten up stock. And so again, what I look for are the major patterns that are going to govern or dictate the next trajectory. So I look at these patterns and then try and take a piece out of the middle of a move. And that was an extraordinary move. And then you get to certain areas where there's a bit of support and you could get these counter trend rallies. And I will do those too, but I will understand that, my holding time in my mind is a day, 2 days. I'm trying to get a pop from 100 to 115, and then I'm gone, because it could come back in your face very quickly because the dominant trend is lower. You have this, huge double top here. And so, yeah, you could have a pop here to 120, but it will eventually die and go back into the trend. So I'm constantly looking for these risk reward opportunities. And, whether it's long, short, I'm just trying to find where prices are, in an area where I can make a risk reward determination. Notwithstanding this huge up market, I think yesterday I told you that I was very suspect of CrowdStrike at these current levels. That, I think that there's a lot of support on the weekly, but basically this, had very, very positive earnings. So there's a lot of good fundamentals, but this chart pattern to me looks inherently very negative. So you have this kind of double top, head and shoulders. And to me, what I look for is the governing price pattern. So there's all kinds of times where, prices are going to go in the opposite direction. But to me, this pattern is going to govern or dictate, where this is going. And what I said yesterday is that I was highly circumspect or suspicious that we would overcome that double top, that prices would take that out, and this would lead to a sustainable rally. So even in an up market, you can see that CrowdStrike today, had no follow through and is starting to have, some resistance up here. So this is not quite a reversal. I don't know that I would get short here, but, to my mind, in here, this is a, substantial resistance level. And, I wouldn't be surprised if it gets up here, it's going to get whacked again. So this is really the difficulty of the markets right now, where you got heavily oversold, but I don't think that we're done going down. So this is a technology ETF, the IGV that I shared with you. And to my mind, I look at the patterns to put me in the direction that prices are going. So like I said, there's just these enormous short covering rallies, where these prices just spike enormously. And this could be, another one. But to my mind, this thing is going to go down. So we may have a 3-day rally here, but eventually what happens is it runs into this and then it has this huge head of steam. And so what I look for is what I call the governing patterns, the patterns that govern or dictate the behavior going forward. Now, what happens is, like I said, with the triple Qs, where we saw that very bearish pattern, is that if we see a bearish pattern and then prices stop observing that, then I'm not going to say, well, this pattern is still saying bearish and I'm going to keep shorting this thing. At some point, if we start negating that, and this is where it becomes a very nuanced and difficult discussion. And so, I don't think, this could work out to be a bottom, and, this could be a huge bottom and translate into an escalation of prices. But, I'm somewhat skeptical of that. So there's this huge downtrend line, and it's very possible that we have a 3-day rally that takes us back to 335 on the IGV. And then, it's going to kick back into this profound downtrend. So we're in this kind of push-pull where markets got tremendously oversold. And, we have these tremendous bounces. And, I think that, the Rokus and the Zooms and the PayPals could still have more gas left in the tank for another 2-3 day rally. But then, I'm, going to be watching for the signs where they're ready to turn back into the trend. And so it's a constant balancing act of, carving out some short-term trades and then waiting for the long-term to kick back in. So I'm looking at this stock, this is a consumer stock, Lululemon, the favorite last year. And now I think this is, a sign of, this is a consumer economy, and this economy has been driven by the consumer. And now the consumer has to pay more for the gas and food. And, are they going to be signing up for more, high definition channels, more Hulus and Netflixes, while they have to pay so much to fill up their car and buy bread and put, food on the table. And so to me, when I look at Lululemon, this is a very ominous sign, and a sign, of what's likely to, be, what's going to go on long term. So first off, you have a triple top right here. So this tells you right there that there was just an enormous opportunity to take, once it just crossed this neckline, which is simply a line drawn through the pattern. And again, like I said, I look for these patterns and then try and take a piece out of the middle of these big trades. And, in the last couple of weeks, it's been harder to do that because, every other day it's a different direction. And so, this is another discussion of trading. Trading is waiting for the right opportunities and the right environment, where I could make all of my money for the year right there and then kind of do nothing for the next couple of weeks. So I know you're on this webinar, you want the one trade that's going to make you a ballistic amount of money. And, I'm not really, I think that it's very random right now. This environment is very random within, I think, the context of a market that's going ultimately lower. And so I'm just trying to give you the signs that I look for to put on these bets in which I make these monster trades. And so in addition to that triple top, what I see on Lululemon, ticker symbol LULU, is this head and shoulders. So it looks just like, again, a man or woman's left shoulder. The peak is the head, and this is the right shoulder. And then you have this neckline that basically cuts through here. And when it goes through there, it effectively confirms and says this pattern is real. Because the market will show you all kinds of patterns all the time where you could say, well, isn't this a double bottom? Well, it is if it, comes and takes out this area and then, convincingly cuts through this area. Yeah, that is. But I don't think that is what's going to occur. I think you're going to get a dead cat bounce in this, and no offense to pet owners out there, it's just a terminology for trading of a bounce that doesn't last very long. And so, you could get another bounce up here, and then I think it's going to go right back in the direction of the trend. And so, we have a mini trend line here. Some of these trend lines are arbitrary, but, we could bounce back up to 320 and this still be in a profound downtrend. So this again is where, there is a tradable low. Whenever I see like an area where it hits several times, it alerts me to that this is a tradable bottom by virtue of not only the pattern, but the price action, where you can see it made a new low and then close on the high, made a new low, close on the high. So it indicates at this area, there's a pocket of support, and I will just trade those like I did with PayPal. I'll look for a 1 or 2 day blast, make 10, 20 bucks on this trade and then blow out of it, and then wait for this thing to start kicking back in the direction of the main trend. So do you guys have any questions on that? So this is what I'm trying to do, is just point out, a methodology of identifying risk or reward based on let's see, Russell says Lulu has an upward, Russell says Lulu has an upward channel at the current level on the weekly chart. So I am looking at this on the daily chart, and what Russell is, and so this is what I do. I will toggle between the two time frames where, you see different things on different time frames, and it may or may not, get you into a trade. So this is again where, on one hand, I see these major bearish price patterns on the weekly. On the other hand, you've played out substantially, and now you're in this pocket of support. So there's very likely that you can get what I call this counter trend rally. So the trend recently has been this downtrend from 500 we went to 280. So, we got clipped by almost 50% in this stock. So when you have a 50% decline, it's very reasonable to assume that you could, even rally back to this neckline and still go back down. You could actually mirror what's going on here, where you could get this pocket here and it could roll up here and, and look like this on the longer term. So this is where, I will toggle between the two time frames, where if I get in here and I see it getting going, and then I start seeing these pockets of support, this is where I'll start closing out my trade. And then this is what we're seeing on the Qs also, is that, we have this bearish price pattern, but there is a pocket where, it indicates that you may have some support. And so it's using these time frames, and what I try and do is get in pretty early into a trade. So if I see this triple top and I see these reversals, I like to get in as the horse is coming right out of the barn, and make pieces of moves like this. And so, right now with this kind of higgledy-piggledy environment, I'm not seeing that kind of, like Bank of America was one of those things where I caught right on the dime. Bought it at 38.5 and it's now at 43 or whatever it is. It was up 3% today. and pellets, PayPal. So that's like PayPal, is just finding something where you're so close to an area of small risk relative to the outcome. So really what I come back to continuously is that trading is really about a relationship between risk and reward. And the problem is, once a trade gets more and more mature into, it's trade, getting in here is very different than if you got in there. So the risk reward calculus here is very different than if you got in there. But ultimately, trading comes down to understanding if you can dial your risk, where my determination was I was going to buy it here last night, and then that was my risk. So in my mind, a very, very small pocket of risk for what could be a much more higher outcome. So to me, it's all about risk and reward. And typically I look for at least 3-to-1 risk reward on my trade. So if I'm looking to, risk $4 on a trade, I'm looking to take $12 out of that trade. Now it's really, quick on the trigger. I think there's more left on the table. I just got out today. It just, by nature of this environment, I'll take what I can get. But the point is that it's all about risk reward. When I put on that trade yesterday, in my mind, I almost felt like I had zero risk, that I was going to get this little blowout here, that this was building up this coil, and so if you can just find trades where something is, just ready to come out of the barn, where it's dialed in this thing, and you can catch it just before it comes out of here, that's where my most successful trades are. And then obviously, once it gets going on its merry way, it's a whole different calculation. So Simon says there's a focus on COVID names like Peloton, Beyond Meat. Well, I don't know if those are just what I call second tier NASDAQ names. They make hard. I don't know how Beyond Meat's a COVID name, but I look at energy. Look, you can use price to do discovery on any trading instrument, whether it's gold, whether it's energy. So this is a good energy name, Devon Energy. So I look at everything. I look at hundreds of charts. And I'm always looking for, risk reward calculations. So this is Devon Energy. It was huge, in the run up, when gold went to 100, energy went to 130. Now energy is likely, going the other way. And so what I look at with Devon is, I see this, head and shoulders. It's looks like another head and shoulders. It's a more complicated chart pattern, but to me, looks like it's in the throes of, of turning around now. It's probably likely to have another thrust back up here. But to answer your question, Simon, I look at every chart under the sun. And, I'm always looking for something where I can see a risk reward relationship. And it's all about understanding risk versus reward. So Simon says, wow, I just traded this one. Ella says, could you check gold? So, gold has been very interesting. I've been actually pretty bearish on gold. My expectation was that gold would break to the downside, and then it broke to the upside. But the question is, where do we go long term? And so, again, I look at everything through the prism of a market structure where, right here, I told our traders to start shorting gold mid last year with the expectation that we were going to 1,700 on gold. And, I don't like to just say things without backing it up. I'm just looking for these gold trades. Here it was. So right at this juncture, sorry. Gold was midway between this ascending broadening triangle. So you can see that I had this structure drawn, and then I look at prices through a prism of a structure and make risk reward determinations. So at that time, I told our members this was an email that went out Sunday, January 10th, 2021. And the instruction was to sell gold at 1867. And I said, gold has been trading, forming an ascending broadening triangle. It's a bear price pattern. This week's massive key reversal is pointing in the direction gold is going to go, lower. And I said, my target objective is 1700. This is when gold was at 1900. And, this is when everybody was still saying it was going to go much higher, which equates to the lower support level of the ascending broadening price pattern. And then further on along the way, I suggested adding to the trade at 1797. And these two trades made me a boatload of money. So this is what I'm looking to do. Seeing formations and patterns in the market that then translate to monster moves. And this is what I'm trying to do. This is an environment right now, which is very much a trading environment in stocks. And so, I'm in and out every 2-3 days, taking, $5, $10, whatever I can take. But typically what I like to do is look at setups that translate to huge moves in the market. And so this is what I was looking at on gold earlier last year. So it was right at this juncture where I saw this key reversal, where it made a new high, it closed on the low. This is a weekly chart, by the way, where each one of these bars represents 1 week in time. And there was an area right there, this double top, where you also had a weekly reversal. So I had a high degree of confidence of, getting short there. Then there was an inside bar there and said, get short again. And so I had these two things. And I said, look, we're likely to come back to the lower level of this triangle around 1700. And I got out, I put my take profit right here at 1687, right, near the lows of this. And you can see how we grabbed a foothold right here, which translated to this recent uprise. And so now the question is, where does gold go from here? And, right now it looks like we put on a pretty formidable, we hit a pocket of resistance and now it's thrust back. So now I'm just going to watch, how gold goes. But if we start coming back to the lower end of this triangle, to my mind, there's a good chance that we're going to go a lot lower. So what I look at, what I do is I try and put a structure. So when you look at gold, it was very random for a long period of time. But by putting this structure together, I can understand. And this is, where you see these inflection points where it gets to this lower resistance level and then, finds these pockets of, these thrusts of momentum. And so, now again, you've got this formidable thing, and I look at it on the weekly, I'm looking at it on the monthly, and we're only halfway through the month. So, right now, like I said, whatever time frame I'm looking at, I'm always looking, how does that close relative to the high and low? So the problem is right now, we're only in the middle of the month, and it looks like we're closing on the low end of this monthly bar. Well, we still got 2 or 3 weeks to go in this month. And, if we end up back here, it's going to have a different look than it does now. But notwithstanding that, we are at a, formidable, resistance zone where this has hit pockets before. And now, we'll have to see how this thing plays out. But to my mind, even if this looks like it's going to go lower, prices don't just cut through this like a knife through butter. So I think that it's, it's going to take a couple of weeks to kind of figure out what this thing wants to do. But for right now, this has hit a huge resistance level. And so I'm looking at this as potentially a long-term double top. Now, there's a long way before, this thing kind of can be played, because you're between a meaningful support, a meaningful resistance, and there's likely to be a lot of random trading in between. I don't like random. I like to find, and also the area, again, trading comes down to understanding your risk. And whether you think this is a buy here or whether you think it's a sell here, to my mind, your risk is just too big to play it out. So if you think it's a sell, well, then you got to put your risk up here. If you think it's a buy, then you got to put your risk somewhere here. And it's just too much risk. It's too much arbitrariness and randomness. I like to find a PayPal where I can find this coil, understand my risk is $4, you know, and make whatever, 12 bucks or 30 bucks out of that. So it comes down to this risk reward idea. And I don't know if that makes sense to you. Please put a comment if, you know, if this is this making sense to you? This kind of discussion, does this resonate with you? Do you see how you can, you know, make a difference in your trading by looking at this trading methodology? So Carlos says yes, John says yes, Britt, yes, sir. So I don't want you to just to agree with me. If you think it's bollocks, then, you know, so Vic says yes, great discussion. Julie, yes, most definitely. So again, I'm just looking for pockets where I can get in, and, you know, it really depends on the market environment. So, you know, sometimes when the market, you know, just vacillates and goes nowhere, you know, I'll just stay out of that market. You know, as it turns out, I, you know, got short here. It went to 1700. I probably should have got long because there was, you know, a double bottom within this cadence of this, and within the weekly and the daily. So you can see this ascending broadening on the weekly and the monthly. So you can see how perfectly this thing intersects on the highs and the lows. So I just draw these patterns and then look at how the market plays within these patterns. So, you know, on one hand, it, you know, caught a bid here. On the other hand, now it looks like it's run out of steam. And, you know, I'm surmising that this is looking like a formidable double top. But let's see how the month closes. Again, if it closes up here, it's going to change the whole look and characteristic, and I will completely change my mind. So the market is a fluid and dynamic place. So I might say one thing and then it puts on a different look, and then I've got to reevaluate. You know, it's this right now. I'm looking at these cues, and I was very bearish, and I still am. And I'm going to, you know, have to see how this week ends. You know, do we end up on the high of the week here? To my mind, this is still very bearish looking. So this is what I'm fighting internally, where now you've got to make a determination. Is this the governing pattern, or, you know, have the tables been turned? We've got this double bottom, and now prices are going to go higher. And it could be both, where prices go higher, hit a wall, and then come back down. And I think it's going to be that latter scenario. I still think that this is a bearish looking price pattern, and you know, we're likely to just keep finding lower levels. But what I think doesn't matter. I will observe the market, and if the market starts breaking through certain areas, I mean, this reversal right here, if this market starts breaking through that, you know, I'm likely to start saying, you know what, maybe we found a bottom here, and now we're just gonna, you know, go higher. Now, the other option is that we could also go into a substantial trading range market, where the market just, you know, does this for weeks and weeks. You can see that, you know, we've been spoiled. We've had one-way direction markets, but, you know, very often, you know, markets can, you know, just go into these quiescent phases for a long time. And so that could be the other thing, where these things just chop. They go back down, chop. But ultimately, I just feel this thing still wants to go lower. I very skeptical that these lows are going to hold. So do you have any questions about this, the methodology, price action, price pattern? So again, you know, I put a strategy after this session, I'm going to, you know, give you an offer to buy my book that really lays out this 4-step process, where the first thing is I try and do is identify the phase or the condition, and I apologize about my printing, the phase of the market. In this area, the phase or the condition of the market was unambiguous. This was a higher market, and you just want to find a way to get into an uptrend. The second is, if there's a phase or a condition or a change, is there a chart pattern? Is there a precedent, a historical precedent that we can identify that then, suggests that we can hop on board a move? Because to me, a pattern precedes trajectory. And I should phase out of this and show you how arbitrary that was and how unbelievably that just intersected on that line. And I'll phase out of this in a minute. Then the third part of the strategy is to identify, once you understand the phase, the chart pattern, and now you want to get into the direction as indicated by the pattern, then I look for what I call my insurance day bars. And I've coined these insurance day bars, or in this case, this is a weekly chart, so this would be an insurance week bar. But why I call these insurance bars is because to me, when I see these bars, it tells me where to get in to join that trade and how and where to identify my risk. So you can see right at the top here, you had a key reversal there, made a new high, closed on the low, and then you had a very slight one here. And I will watch these things very carefully, where it makes a new high, closes on the low, right at an area, where there's substantial resistance. So to me, I will just sell or just throw a sell stop right under that low. And you can see going into next week, it went higher. And if it went higher, then your sell stop's not triggered, you're not put in. Well, what happened is you have this pending arresting order. The market goes up. Wednesday night, while you're sleeping or in the middle of the night, it hits you. And now you're put into this unbelievable trade. And so it tells you, A, where to get in that trade, and then B, where my stop loss is. So this is another indication of how I can isolate a very small pocket of risk for a very acceptable return. And this is what I'm looking to do all the time. So the insurance day bar is, comes in two forms. One is a key reversal, where, like we see at the top there, this thing made a new high and it closed on the low of the week. And this is a weekly bar. And you see another right there, made a new high, closed on the low, and you had a substantial flush from there. 340 to 320 on the Qs is a tremendous move from that key reversal. And so, and then the other insurance day bar is what I call an inside bar. Now, these could come in combination, where you could see a key reversal and an inside bar. And usually those are great, where you can understand your risk much more carefully. But it doesn't have to be. It's one or the other. And so I'm just trying to see, this would be an example of a small inside bar. You identify this uptrend, there's a little inside bar, and the market keeps going higher. Here's another inside bar. It's literally where the range of one bar sits within the range of the other. And to me, this is like this PayPal, this coil. To me, what an inside bar represents is a storing or coiling of energy. So like PayPal, where we saw the last several days, you just saw 4 or 5 days, one inside the other, just coiling. And so not surprising today to see this thing jump out of here 7% on the day. And then the last is to confirm, everything you're looking at. So this is really a 4-step layered, one on top of the other, where then you have your execution plan. Where once you see the phase, the chart pattern, the inside bars, then if you want to buy something, you basically put a buy stop above the high or a sell stop below the low. And like I said, in a minute, I'm going to offer you my book, It's a pay what you want. Don't be frightened. It's not going to cost you a fortune. And so if I saw a setup like this, I would basically just put my sell stop underneath these lows and let the market put me in, right? So if the market decides the next day to take off and go off without me, then my sell stop's not triggered, and basically I cancel it. On the other hand, if the market goes up, hits me, then I'm put in at the time and price that it's likely to go in my favor. But I don't just look at these insurance day bars in a vacuum. I don't look for every key reversal and say I'm just going to put a buy, above a key reversal higher or sell. You have to see the previous trend or pattern that then triggers that. Here you have two key reversals, this double bottom, but now you got to say, is this going to be an uptrend, or is this still the dictating pattern? And that's where it gets, a little bit difficult, where, and if you're not sure, just let the market tell you. Let some time go by and wait for the market to tell you what it wants to go. So this is my kind of 4-step plan that gets you closer and closer to the bullseye of a high value trade. And it's all about, understanding where to get in and what your risk is. It's an ebook, Yvonne S. Is this a hard copy or an ebook? So it's just a downloadable PDF. Duncan said it's a very good book and worth it. So thanks for that, Duncan. Jensen says, do you use a weekly or daily chart? And the answer is yes. So the idea is that really what I'm trying to do, my whole objective is to take pieces of the middle out of, big moves. And in order to do that, you can't see this move on a 15-minute chart. This is a weekly chart going back to 2018. So what I'm trying to do is use whatever I can to get a bird's eye view, a global view, and make a determination of what's going on here. Is this an uptrend? Is this a downtrend? Is this a trend that's in the process of changing from an up to downtrend? Is this now a continuation pattern in a long-term uptrend? So I'm just trying to understand what is the big picture, and then take chunks out of moves, whether it goes up or down. So whatever assists me in the evaluation, that monthly, weekly, daily. But what it isn't is a 5-minute chart where that's just gambling. Where you're just reducing a time frame where you could see a double top on a 15-minute thing, and then you look at it and then you wonder why it goes in your favor, and then an hour later it's completely the other way, because it's just random. Where a market goes, intraday is pretty random. I try and limit my trading to either at the beginning of the day or the end of the day, because I always want to see how does a market close relative to the high and low. It goes a million miles in one direction or another. If we look at Coinbase, it went up, it went down, and it ended up closing right on the high. But at some point during the day, it got decimated. You can see it went to this 172 and then went all the way down to 161. So you're saying to yourself, if you're using this chart, and this is the difference in, using these bigger time frames versus this. So you could, now you're looking at this chart and saying, what is this? Is this a double bottom? Is this a double top? I don't know what this is telling me. But right here, you saw a beautiful double top. And you say, okay, now I'm going to get short. And you're short, and you're all comfortable. You're watching it come up, and then it goes right up your ass. Why? Because, the bigger patterns are telling you that there's support down here. So it's not important where this goes intraday. You could see that this went everywhere, and then it closed on the high of the day. So by closing at a certain level, it tells me that the buyers are in control. And so I just look for, where to get in the beginning of the day, and then I look and see how something closes. So John says, before I found Mark, I burned my face off trying to trade the 1-minute chart. Yeah, so I mean, you can do that. Here's a 1-minute chart, and it goes down and then it goes up, and it's all pretty random. Julie says, really appreciate your expertise. I'm grateful. You're welcome, Julie. Jim Connor says, same here, John, I got smoked. So what I try and do is try and find Centra says, is this analysis best for the day, 60 minutes, 30 or 5 minutes? So I guess you didn't really understand that discussion. Thomas says, can you talk about the elite program? So the elite program is a program that we offer. It's the highest level of what we offer at the Pattern Trader, where I send out a daily email with, you know, our trades. And I'm trying to just give you an example of, you know, what those trades look like, but they're all open with my own personal email on there. So the email, the elite basically, and the whole idea of whatever I do at the Pattern Trader, people always focus on what was the trade, what was the signal at the time, and, you know, did that signal work? And if it didn't work, then maybe this guy's not so great. The idea is to, you know, educate you on what I'm looking at and why I looked at trade. And it's not really it's not that it's not relevant. This is not really a signal service or a managed account service. The whole intent of what I'm trying to do is, you know, educate people on how to look at the market. So I'm trying to just find an example of a trade here. And I just got a new screen and I can't adjust my settings, so it's all out of whack here. So just give me 1 minute. So, well, I guess this was a weekly. So this is what I try and do, you know, try and show you what I'm looking at on the chart and, you know, why I'm looking to do it and whether it works or not. It includes, you know, the trend, it includes the chart, and then a discussion of what I'm looking at. And then the idea over time, what win or lose, is to get a feeling for how this price pattern, you know, action methodology, you know, works. So CN says, is your elite program for beginners or experience only? So it's really for both. It's, you know, high level education. It includes, you know, everything we do. So on Fridays, you know, I know everybody's asking me to look at this chart or that chart. I do on Friday something called the Weekly Underground Series, where every Friday I look at all of the markets, the euro, crude oil, gold, stocks, and then, you know, I turn it over and we do a, you know, Q&A where people get to ask what stocks they want to look at. And it's a very interactive thing. And that's all part of the elite program. But my intent is I'm not here to pitch you. You'll never hear a pitch on these webinars, completely free and informational. After tomorrow, you'll get an email from our team asking you if you're interested in the elite program. If you think you are, you can indicate your interest. Send an email to support@thepatterntrader.com, and I'll just leave it there. So Duncan says, if you seriously want to learn and earn, then the elite is way to go. So Duncan, I really appreciate your endorsement. Duncan is one of our longtime members, and thank you for that, as is John. Mark is just the best, and the book is a must-have. So thanks, as always, John. So everybody's asking about the price. Our team will discuss that with you, and hopefully price will not be an objective. They will work with you depending on you know, where you're at. But the idea is really to find out if, you know, this is for you, to see if it's a fit. We don't offer it on our website, and so you know, I'm really not gonna. So Asus says, and again, this kind of indicates that. So Asus says, if one starts with $1,000, where would I be approximately after 3 months? Just an estimate. So it's impossible to say, Asus, and I'm not trying to hedge, but I think with great respect, you're missing the point, because what I am trying to do, so there's an old saying, right? Give a man a fish and he'll eat for a day. Teach a man to fish and he'll eat for a lifetime. So what I'm trying to do is give you something that you can fess on, not for the next 3 months, but Asus, where you can understand how the markets work 3 months from now, 6 months from now, 9 months from now. So we may be in a period where it's really topsy-turvy, it's difficult to make things, but all of a sudden something may click, from something that, I said, or how this methodology resonates. In 6 months or 9 months, you say, wait a minute, here's a double bottom, here's a double top. You'll get in there and you'll make a huge amount of money. So it could be 6 months from now, 9 months from now, or 3 years from now. So the question always to me is, what is the value of information? So this is literally called the information age, where companies like Google are infinitely more valuable than companies like Boeing that basically make things, because data and information is far more valuable than a thing. And so what I'm trying to offer here is, it sounds pretty arrogant, but I've got decades and decades of looking at these freaking markets. And I think I kind of understand how they work. I don't get it right all the time, but that's really not the point. I made one trade last year. In 3 days, I made 7 figures. So the idea is, if you can understand how the markets work, and then one day you'll be in a position where you'll see that setup, and maybe you won't make 7 figures, but you'll make a lot of money. So again, that's really what this is all about. It's information, it's education, it's about a way of looking at the markets where you don't have to rely on those guys behind me. I don't know if you can see my screen. I've got a financial channel there. You don't have to parse what Jay Powell says and have an MIT economics degree to kind of figure it out. The market is a discounting mechanism. The market actually points in the direction it wants to go. How did I know all of these stocks beginning last February? And you can go on my YouTube videos, you can look at my emails, you can talk to our members. How did I know, where this was 130 bucks, I said this was going to be a $10 stock. When it was 120, I was saying this is going to be a $10 stock. This is QuantumScape. Or when Beyond Meat last February went to $200, I said to our members, this is a $30 stock. And it went into the 30s this week. It was up 10% today, but that's just a dead cat bounce. But how did I know right up there this was going to be a $30 stock? Because the market patterns told me that. I didn't have any special insight. I didn't know what, there was a huge bear price pattern that informed me that this thing was going to go a lot lower, and I thought it would take out its IPO price, which is now done. Or Peloton, where it was the trade of the flavor of the week last year at 170 bucks. I said this is going back to $20. So it was these 4 stocks for a year. I was telling our members to short this, and then Zoom was the last. So how did I know that was going to happen when Tesla was, or Zoom was 500? Because the market told me. And if you can understand the market, then you don't have to rely on Jay Powell or anybody else, or any forum, guy in the forum, or any opinion. The market is a discounting mechanism. The market is ahead of the news. So, when it was up here, I said it was going to be down there. And how did I know that? It was just a collection of price action. We made an all-time key reversal, made a new high, close on the low. You had, this head and shoulders here. You had this double top here. You had this descending triangle here. And once it broke out of these critical areas, then it was gone. And so it was collectively, and I said at the time, if you just measure this pattern, this from the bottom, which was 250 to 600, and just shave that off, it takes you down here. So sometimes when you see the patterns, you can actually measure where they're going to go by just measuring the carpet and the drapes here. So this whole thing was just a huge double top. And when you see that, the market's telling you it's over. I had all these analysts say, you got to think of this as a telco. This is a new way of looking at things. And yeah. So now you can appreciate, also how beaten up it is. It's gone from 400 straight down to 100. So, can this thing go back to 130? It could do that in a heartbeat. But, it just would be a dead cat bounce. Ultimately, I don't think this ever comes back. I shouldn't say that, but, look, it's possible. But so the idea is to take pieces out of the middle of just huge moves like this. And I've been, telling our members for the last year or so, since it topped out, up here and up here, that this was a huge, big short. And again, the market is a discounting mechanism. There's no way last February, when all these stocks were 80% higher, that there was anything at that time other than just the price action and the price patterns that informed me that this is where they were going to end up. So Joy, thank you. Joy says, if you follow Mark exactly, you'll make a profit. I had to learn to trust him and his teaching and not come up with my own great ideas until I can understand what I'm doing. So look, I'm not reinventing the wheel here. You can go to textbooks and find all of these patterns. What I've tried to do is build a mousetrap where one step reinforces the other. And here's the thing: when you kind of get into the market, you'll be confronted where all of a sudden you'll see, well, here's a head and shoulders, and then all of a sudden you'll see a double bottom and go, well, which is which? And that's where the nuance comes in. When you see everything played out, it always looks a lot easier than when the market's throwing you all of these curves. And so, I try and bring that to our members at the Pattern Trader, where I try and, parse, sometimes it gets very easy and we can just sit in a trade. And then sometimes now, the markets, are in this ambivalent phase where you've got to figure out, okay, which is the decisive price action. And it's a combination to me of patterns and price action. So I look at how something closes relative to the high and low in combination with this. And so usually it's a combination of, peeling back to the longer time frames. And I'm looking at this. This is the triple Qs or the NASDAQ on the longer time frame. And I still see kind of this bear pattern, but it could be like gold, where this is the same pattern as gold, right? Where gold effectively, dug in here at the bottom of this pattern and then went way higher, and now it's reversed. So what I like to do is see exactly how, you can see how this is a monthly chart. So it was kind of no, mistake when it kind of came here and found a bid. Now we have to see. So this is inherently a bearish looking formation. But what I've, learned to do is draw these structures and then observe how these markets play within this structure. So, what I was talking about, this is the NASDAQ. And let me just show the NASDAQ, because these charts are just amazing how they play out. And people say, well, I think, technical analysis is, junk. It doesn't really work. And yet, I've just called the biggest trades where you could not see it on a fundamental. So what I was talking about was you had this broadening pattern. You had this ascending, broadening price pattern, right? And it was playing out. And then all of a sudden, it looked like up here that, it would never look back. And then we have this outlier in the form of this pandemic. It hits exactly the top there and does what? It comes exactly to the bottom there. So this thing was playing out for years, bouncing, and then boom. And so to my mind, it just is amazing to me where this was, a 100-year outlier event where we hadn't had, something like this in 100 years. And yet the market took it from exact high to the exact low of this pattern. And so what I do is I draw these patterns and then see how they play within the patterns. So this is an ascending broadening price pattern where throughout the prices are going higher. They start out narrow and then widen or broaden out at the top. Now this is a neutral pattern because prices could either go lower or higher out of this pattern. And so you can see that once it hit here, it just, that was it. But now you have another ascending broadening price pattern where this may reverse lower out of here. And I think there's a good chance that it does. But this is a monthly chart, and you can see that it could take months and months for, you know, this to start breaking again. But it's understanding these structures and how the market plays within these structures and creating risk reward trades that, you know, you can just make a boatload, you know, in these kind of moves. And that's really what I'm looking to do. I'm just trying to find little entries where I can leg in and, you know, capitalize on big moves in the markets. Howard says, do you leave your structures on your working charts? So I know these in my mind, right? So once I've kind of drawn this, I go back, I toggle back and forth. I see where we are, you know, in the structure. And so, you know, the idea is to understand at a global level what's going on. So this is a monthly chart going back to 2010. So I'm looking at a decade's worth of price information. And this is in contrast where most people are looking at a 15-minute chart and they're seeing at best maybe 3 days of information. So, you know, maybe you can appreciate by, you know, understanding what's going on in a big picture that now informs you where you can then get in moves that are much bigger. So by looking at a 15-minute chart, by definition, you're looking to get in and out very, very quickly 5 times a day. And that is just going to be a losing proposition. So what I'm looking to do is get in trades and seize on big moves where, you know, last May I bought Beyond Meat at 120. 3 days later, it was at 160. That's what I'm looking for in my trades. Does it come every day? No, but it doesn't have to. You know, if I just one of those trades, just that one trade made my, you know, effectively made my year. So it's a whole contrast in thinking where most people think of trading as an activity, that they got to be in and out like a squirrel darting out of a tree hunting for nuts. To me, it's waiting for that setup, waiting, right? So, you know, it's like those guys out, you know, in the surf. You know, you go out, you know, if you live in a coastal area, beach town, you see those guys out there at 5 in the morning when, you know, there's no waves. They're just sitting out there and waiting patiently for that one wave that they can take to the beach. And that's really what it's about. So most people are thinking about trading every day, making or losing, you know, measuring themselves every hour. I'm trying to find that one trade that's just going to carry me to the beach. And that could be 3 times a year. So Tom says, how often do you see those big kinds of trades? They come on all the time. You had them in energy, you had them in gold, you had them in, they come all the time. So Sel says, sometimes so much time spent. Sel says, sometimes we spend so much time hunting for the right strategy. Mark has simplified the process. So thank you for that. And that's really, to me, I've always felt like if you can't explain something to a 6-year-old, then it's too complicated. Then I can't understand it. You know, and I've sat on these webinars where literally, you know, where I see lines like this, and then, you know, there's like just a million lines going through there on a 15-minute chart. And you're looking at something like this, some kind of crossover, some kind of intersect, some kind of this. This is just a bar chart. There is no volume. There's no MACD. There's no moving averages. There's no Bollinger Bands. It's just a simple price and time. And to me, the market tells a story. Is the market going up or is it going down? And as my mentor, Graham Loving said, Mark, I simply want to buy a market that's going up and sell a market that's going down. And so that's what I try and do. So with that said, what I'm going to do is give you an insight into my book. It's called the Freedom Trader, 5-step execution plan, and it's pay what you want. So basically what this means is you can decide what value this information, means to you, $5, $10, $20, and then I will double whatever you decide to pay and donate it to my favorite charity, the American Childhood Cancer Organization. So, A, you're getting great information, and B, the proceeds are going to a great cause. Children with cancer. You can't, think of something more honorable than that. So, I've donated over $35,000 probably in the last 12 months. So all the royalties from my books I take in through the website and what have you, I double that amount and I donate it to the American Childhood Cancer Organization. Like I said, it's a pay what you want. So basically you come here, you nominate your price and what have you. So let me just stick the link in. I don't know if you already did, Dwight, but I'll just stick it in. If you could stick it in for YouTube, Dwight. So that is, basically lays out everything I said. You can, download it in a PDF and kind of study it in greater detail. Son says, thank you very much for this awesome knowledge. You're welcome. Casey, you're welcome. Linda, you're welcome. So any questions before we wrap it up? We'll be able to take a look, what happens tomorrow. So. Artono, you are welcome. James says, I just bought the book. So James, thanks for that. Hopefully you get some great value out of it. And then there'll be some child that really will appreciate your donation. So says, I appreciate you and everything you've shared. So thank you for that. So again, I think this week has been, a little bit of a struggle for me in that there have been a lot of contrasting, a lot of different things that are happening in the market. A lot of things have been oversold: Roku, DocuSign, Beyond Meat, Zoom. You could kind of buy those, you make these quick 10% flushes. To my mind, I think we're all gonna, I think there's still more left on the table. What I call the pain trade. If you're short, I think there's going to be more pain, but I think this thing eventually still goes lower. And, I don't have to guess that. The market will tell me when it's ready to go. So I'm always just trying to get in sync with what the market is telling me. Natalia, thank you as always. Vic says, thanks. I've lost count of the accounts I've blown day trading. I think now I know which way to go. Looking forward to reading your book. Kathy says, thank you. You guys are welcome. Eddie says, love your Zoom meeting. All right. All right. Anything else before we adjourn? So Monta says, so China was stepping on the throat of a lot of these trades, and then they decided that they were going to get back on the capitalist bandwagon. And, we had this huge short covering rally. Give me one moment. Sorry about that. So yeah, the Chinese stocks got just a huge, I don't know what just happened to my charts here. Something just got screwed up with my charts. I'll have to adjust that. So all these Chinese stocks went up just huge today. You can see that JD was 40 bucks, closed 50% higher. And I don't know if this is real. I was looking at these things; they were getting so beaten up, and I was thinking of buying these things yesterday. JD put on the bottom. This was BABA. BABA, closed at what 70 and went to everything was up like 50% today. So these Chinese stocks, it's just like anything else. Everything has been so beaten up that when you get into these holes, these vacuums, this is where it becomes very dangerous to get short. It was like this phenomenon about a year ago in GameStop. So I love to short stocks, but you can get into a situation where you get into a $5 stock and it goes to $500. And that's the problem with going short, is that your upside is infinite and your downside is infinite and your upside is finite. So in this case, there were a whole bunch of shorts, hedge funds short at $5, and they were literally run out of business by these people forcing them to cover their shorts. So this is a stock called GameStop. I'm sure you've heard about it. I think it's just a phenomenon. It's eventually going to go back to $5, but this is the danger when you get short. You can build up these just huge pockets of energy where, at some point something becomes so beaten up, and then you have one surprise, good piece of news, and, this is what can happen. So, this is Alibaba, and it's gone from 320 bucks and it hit like $70. So at some point, and this is what's happening, we're at this point where things have been so beaten up that, every dog is going to get its day. And so these are not patterns that translate into broad moves that you can sit in. These are just bounces. So this is DocuSign that has gone from 320 bucks to 60 bucks. So at some point, you're going to have these flurries. And this is basically what you're seeing this week. So to me, I think there's money to be made in buying these things, but you don't want to overstay your welcome, because 3 days later, they're going to go back right into the trend. So Mike says, do you have a course where you can teach? So that is part of our elite program, Mike. And somebody from our team will contact you after the webinar series tomorrow if you're interested. And then we have other things that, if the elite's not your cup of tea, then there are other things that, I offer that will get you on your merry way. So with that said, I'm going to adjourn here. I will see you back tomorrow, 4:30 Eastern Standard Time. And have a blessed trading day tomorrow. Stay safe. And again, it's all about risk and reward. Doesn't matter what you do, short, long, understand why you're doing it. Is there a pattern? Is there a trend? Can you understand the risk? And is your outcome bigger than your risk? So if you can line up a trade, it doesn't matter if it's in oil or corn or the euro versus the yen. It's really all the same. I just look at a chart like this, a pattern like this, and I don't care what the actual instrument is. I can start making risk reward determinations based on, just a picture like this. So you're all welcome and have a great day. Dwight, thanks a lot.